أعوذ بالله الشيطان الرجيم بسم الله الرحمن الرحيم. So as we had started talking about the key accounting terminologies, and as I told you earlier, you need to familiarize with this technology, with these terminologies, because as from next week, you'll be finding a lot of this when you are covering the course. And as I told you in our last lesson, actually, we shall not go deep into the accounting because I know many of the students in this class, they don't have a background in accounting, only a few. So what I'm doing here, I'm just giving you the highlights. But if you want to dig deep, of course, you can enroll for the CPA courses. You can also go deep into the references book that I sent into in your WhatsApp group. Now let's continue. So another thing that you'll come across is what is known as expenses. Of course, expenses is al-masarif. And these are the costs incurred in the process of earning revenue. And this always reduce the company's profit, you know. And we have, for example, the rent you pay. If you are, for example, renting a place for your business, the salaries are rawatib, you know. We are talking about the utility bills, talking about the electricity cost, talking about the water bills, talking about the internet, for example, if you are using internet in your business. So all these are known as utility and they cost actually the business. So you need to find a prudent way of managing all this. And the cost of goods sold. The goods that we normally sell in our businesses, they come with a cost. And there is a way that you can know how much it costs. So you sell these goods, for example, but there are some costs incurred when you are selling. So, for example, if you are selling something online and somebody orders for that thing, when you are delivering the good, you are going to use some transport, some fuel to facilitate the sale. Then the net income, swafit dakhal. So this is the profit of a business after all. The key word is all. Because we normally have the gross income and you have the net income. So this is the profit of a business after all expenses have been deducted from the total revenue. So and this one will always reflect the company's profitability. So the revenue minus the expenses. The bigger the figure, the better. It means that we are doing well. And we shall look into practical examples. Now, financial statements. You also need to familiarize yourself with financial statement. So these are the formal records that provide an overview. When you're talking of an overview, they provide us with a snapshot, a picture of the financial performance and position of a business. And there are many, but in our case, there are many, but we have three major. So the first one is the balance sheet, and it shows the assets, liabilities, and equity at a specific point in time. We have the income statement, summarizes revenues and expenses over a period, showing net income. Then we have the cash flow statement. It tracks what? It tracks what is coming in and what is going out. Cash in, cash out. So these statements are very important. As a businessman, as a person who is working in a company, you need to familiarize yourself with the basics of this if you are intending to do business. Then there is also what is known in accounting as the double entry system. So what is the double entry system? So this is an accounting method where every transaction affects at least two accounts. Maintaining the accounting equation. This equation is very important. You need to memorize it. That is the assets equals to what? Liabilities plus equity. So when you're talking of a double entry system, they are normally in each, when you are doing a transaction, it will affect more, or it will affect one or more accounts. For each and every transaction you do in your company, in your business, or in your organization, other accounts are going to be affected. So look at this example. When a business buys inventory for cash, for example, when you're talking about inventory, you are talking about, if you're having a shop, the sugars are your inventory, the rice. And so when a business buys inventory for cash, so there are two accounts are going to be affected. That is why it is called double. So inventory and asset increase. So when you're buying sugar, for example, you go to Jigjiga or you go to whatever, you buy sugar to your shop. This is an asset. So when you buy, your inventory is going to do what? Is going to increase. وَفِي الْمُقَابِلِ, something is going to decrease. Always. So one thing is going to increase, another one is going to decrease. So your cash, either cash or your bank, money in bank will do what? It will decrease. So that is the idea. That is the idea behind the double entry accounting system. Now, the accounting period. So it refers to what? The accounting period refers to what? It refers to a specific time frame in which financial activities are measured, reported, and analyzed. Commonly, accounting periods are quarterly or annually. So there is what is known as accounting period. And when you're talking of this is a period where you have to do what? Many companies, that is when they normally measure, report, and analyze their financial statement. In some countries, it is after 1 year. In some countries, it is after 6 months. In some countries, it is quarterly. That is after every 4 months. And we normally have the fiscal year. So what is a fiscal year? Is 1 year period that a company uses for accounting purposes. It may not necessarily align with the calendar year. So the accounting, the fiscal year, maybe if you can, it can be from March to March next year. If your accounting period can start from September to September next year. So it does not have to necessarily start from January to December. No, your accounting period can start anytime. Now we have depreciation. Also in accounting, you have to know what is depreciation. So depreciation, the systematic allocation of the cost of a tangible asset over its useful life. It reflects the reduction in value due to wear and tear. So for example, a vehicle purchased for business use is depreciated over its lifespan. So when you are talking about depreciation, we are basically saying that there are some assets in our organization that will always lose value. They will always depreciate. For example, a laptop that you bought in 2020, the value is not the same in 2025. It has really depreciated. So in our accounting, we need to account for that depreciation. And when we are talking about the depreciation, it's all about the cost, the amount that the amount that you bought the laptop, for example, that is minus what minus the selling price. For example, if you bought the laptop in 2020 for $1,000, then now you are in 2025. Maybe in 2025 you are going to sell it for $700 or $600. So it will be the 1,000 minus the what? Minus the 6,000 minus the $600, then divide by the number of years. That is how you are going to account for the depreciation. Then accounts receivable, this is what? Money owed to a business by customers for goods or services delivered, but not. Sometimes your customers, they come, hey, Mohammed, I need 1, 2, and 3. I will pay you after 1 week. That is called account receivable. And in this case, account receivable, you normally record it as a revenue, even if you don't receive the cash. So for example, Mohammed say, I will pay you after 1 week. In your account book, you record it as an income earned. Then you have account payable. Money a business owes to supply or creditors for goods or services received. So account payable is the opposite of account receivable. So account payable is what you owe other people, your bank, your suppliers, your creditors, ila ghairi dhalik. Then you have a general ledger. This is a complete record of all financial transactions over the life of a company, categorized by account. So you have a ledger book. In the ledger book, you have what? You have different accounts, the bank account, the cash account, the account receivable, accounts payable, the notes payable, the loans. So it's a comprehensive book with the accounts. Now, so here, just quickly, we have what is known as now the financial. We have different types of accounting. We have different types of accounting. For example, we have the financial accounting, and we also have the managerial accounting. But in our course, we will be focusing more with the financial accounting. We shall not be focusing with the managerial accounting. So when you are talking about the financial accounting is the branch of accounting focused on the preparation of financial statements that provide a snapshot of a company's financial performance. So when you're talking about financial accounting, it is about those three statements: the balance sheet, the income statement, and the cash flow. That is all about the financial accounting. Now, the managerial accounting, which we shall not be focusing in managerial accounting a lot. Managerial accounting, also known as a management accounting, is concerned with providing financial and operational information to internal management to assist in decision-making, planning, and controlling operation. So managerial accounting, it provides information to internal consumers, while the financial accounting, it provides information to external consumers. So that is the main difference between managerial accounting and the financial accounting. The managerial accounting, it provides information to the manager inside, to departments inside the organization, because they want to do what? It helps them to make decisions. Now, here are the key differences between financial and managerial accounting. So the financial accounting provides information for external users. Managerial provides information for internal management. That is the key difference. Number two, standardized financial statement. They are very standardized. And when you are talking about standardized, it basically means like this financial statement, if you go to all the companies, they have the same standards. So for example, if you go to Somtel company, their financial statement, the way it has been written, it is almost the same way the financial statement in Soltelco has been written. But the managerial statement is the managerial accounting, it is customized. So the managerial accounting in company A will not be the same with the managerial accounting in company B or C. It will be different. But for the financial statement, they are standardized. So for example, when you're talking of a balance sheet, you will always have the assets, the liabilities, the equity. You'll always find those three things. That is the standard of a balance sheet. If you go to the income statement, you'll always find the expenses and the revenues. That is the standard. Then for the regulation, the financial accounting, it must comply with international standard. But the other one, there is no formal requirement. Then the financial accounting historical focus. It focuses on past performance. What was our profit last year? What was our profit, for example, in 2023? So it focuses a lot with the past information, data. But the managerial is future oriented. It's all about forecasting, budgeting for the next year. Then lastly, financial accounting periodically, maybe quarterly or annually, but this is on a daily basis, maybe on a weekly basis or on a monthly basis. So those are the key differences between what? Between the financial and managerial accounting. So in this course, business accounting, in business accounting, we will be focusing more with the financial what? We'll be focusing more with the financial accounting. So that is the end. That is the end of our lesson today. So that is the end of our lesson. So I will be sending the link now in a short while. I will be sending the attendance link. And after 5 minutes, I will be disabling it. So please, the moment I send the link, ensure that you take your attendance immediately. Okay? So is there any question, please, before we leave? So I think that's the end. If you don't have any question, we'll meet tomorrow. So tomorrow I will be available. Last week I was just busy, So that's the end of our lesson. Let me send you the attendance link. Thank you.